Hello, everybody, and welcome to today's Q&A session. Today is the final December daily Q&A for 2020. It's December 31st. Crazy how that year has come so quickly to an end, and yet simultaneously dragged by. But I know that whether it's good or bad, 2020 is coming to an end, and it's time for us to get to our questions. I'm Rachel Neighbors, and you are here with Neighbors Group and Solo401k.com. We host these December daily Q&A sessions so that you can have your questions answered. The end of December is always a flurry of activity around Solo401k.com and Neighbors Group. And sometimes there are a ton of voicemails and emails that come in. We want to make sure that you have a central place to come and get your questions answered. So that's what we do on these Q&A sessions. We are going to keep today's Q&A a bit snappy because we've got a lot of applications coming in, and we want to make sure that we get your documents prepared by the 2020 deadline. So if you're a longtime Neighbors Group client, then just know that we do plan to keep doing these Q&A sessions with some regularity in the new year so that we can be here to answer your questions. And if you're new to Neighbors Group, what we want to accomplish on today's session is make sure that you have your questions answered so that you can get your plan going for 2020. With that, let's go ahead and dive into the pre-submitted questions. Our first question comes from Ruth. Ruth says, I paid my setup fees, but I'm stuck on the page that says I need a new LLC. I just opened an LLC for 2020 and wanted to put my small real estate investment in that. And I wanted to open a solo 401k. Would I put your new LLC you create for me in that? And would that LLC be able to be under or joined with my current LLC? This is a really good question, Ruth. We get this question a lot. I want to make a distinction. Your business is one entity. Your 401k investments are another. So a 401k is a company retirement plan. You set up a 401k as an employee benefit, and you are the only employee in your business, so you're the one that gets to benefit from that 401k plan. Every 401k, by law, must have a sponsoring business. So Ruth, in this case, it sounds like your LLC that you already established is your sponsoring business. And your 401k is the company retirement plan for your small business. When your small business makes money and pays you, you can put some of those earnings into your company retirement plan. That's your solo 401k. And then your solo 401k can start investing. Your 401k is able to buy and hold assets like real estate right out of the box. That special purpose LLC is optional, but it is something that many of our account holders add on, myself included, specifically to hold rental properties purchased with 401k money. Think about it this way, Ruth. Let's imagine you have $500,000 in a solo 401k plan, and you want to buy a rental property worth $100,000. The 401k can absolutely wire the funds from the 401k bank account to the closing table and buy that property, take title of that property. If the tenant wants to sue the property owner, who's the owner? The 401k trust. In that specific instance, the tenant could potentially try to pull in other assets of the 401k into this lawsuit. In contrast, let's say you wanted to use the special purpose LLC. Same scenario, $500,000 in a solo 401k, you want to buy a rental property worth $100,000. But this time, you put the rental property in the LLC that's owned by the 401k. If the tenant tries to sue the property owner, presumably they would hit the ceiling of the LLC and not even know about the 401k trust. So some of our clients like to use the LLC for some asset insulation. It makes closing a lot easier with title companies. Title companies deal with LLCs all the time where they might not be familiar with a 401k. And it could potentially provide some asset protection as well. Of course, you want to work with your accountant or your legal counsel to see what structure is right for you. But Ruth, I do want to make a distinction that if your LLC is your business, your 401k money cannot go into your business LLC. They are totally separate. Your LLC business has its own bank account. Your 401k has its own bank account, and never the twain shall meet. When your LLC makes money and pays you, you put some of that money into the 401k plan for your company, and then your 401k starts investing. If your 401k establishes a special purpose LLC, then that LLC under the 401k can hold assets. So they are two totally different structures. The LLC that you have, that we would establish for you, is not joined with your current LLC. The LLC we would create for you is owned by your 401k trust. Great question. Next question from Ruth. I am a small-time, first-time investor. I'm self-employed and can probably put away around $40,000 a year for 10 years. I don't really know the market at all. Am I truly left on my own to invest to how I see fit? Or do you help guide, suggest, or have packages for people who might want to diversify, safer, less safe, more risky, and have a combination of all of that getting more safe as I end up the 10 years? Great question, Ruth. So there's a couple of paths that you'll want to consider. The first is the self-directed path, DIY. And that is where you choose the investments you want to make. You execute on those investments. We don't sell you investments. We don't give you investment advice on this DIY path. We can help with a lot of logistics, help you open bank accounts, brokerage accounts. We do a lot of ongoing trainings on different types of investments you can make, real estate, Bitcoin, private lending, farmland, all that type of stuff. We'll provide lots of tools for you, but you are the one that's ultimately deciding where to invest and when to invest. That's the DIY path. And for many, many clients, that makes a lot of sense. For other clients that want some more handholding, we do have a wealth management arm. This call today is not an offer for that. It's a totally separate division. If you would like to learn more, you can join the waiting list at nabers.com. That's NABERS. And that is a full service wealth management division with investment advice. So Ruth, I think those are your two paths. If you're on the DIY path, then definitely make sure you're plugged into our network at solo401k.net. There's a ton of resources in there. I'll actually just share my screen so you can see what that looks like. Okay, Ruth. So here we are on solo401k.net. This is our Solo 401k network. There's a ton of information in here. You can see that it's quite active. Lots of people are asking questions, getting their questions answered. And we also have events. These are webinars and trainings that we do. You can see our December Kickstart is here, for example, and our past trainings. We do all types of webinars, interviews. We want to make sure that you have a good resources at your fingertips so that you can get the help that you need and get ideas for how to invest your funds. So that would be the two paths for you to consider, Ruth. For right now, just get your plan set up. The immediate action that you need is to have your plan documents from us. I think you and I were talking on our website earlier today, and our team is preparing those documents for you right now. So for today, all you need to do is get your plan set up. Then in the next couple of weeks and months, make sure you're plugged into our network so you can access those resources for investment ideas as you get going. Welcome aboard, Ruth. All right. We have a couple questions here from Raghu. Hey, Raghu. So Raghu says, I thought the 401k contribution should be done by December 31st, and profit sharing can be done by the tax deadline. But in the video Q&A session, you mentioned both 401k and profit sharing can be done by the tax deadline. Please clarify the 401k contribution deadline. So this is a really great question, Raghu. I'm going to share my screen, and I'm going to pull up an IRS publication for you. If you've been on these Q&As in the past, you've seen me pull this up. IRS publication 560. And I know you probably never thought you would get excited about a retirement publication from the IRS, but this one's actually pretty cool. So this publication is all about small business retirement plans. And specifically, Raghu, what I'm doing is I'm going to page 3, and I want to look at this chart right here. We'll make it a little bit bigger. Okay, so this is the chart for when contributions need to be made. The solo 401k is a qualified plan, also known as a defined contribution plan. So this column or this row right here is all about what the solo 401k is in reference to. Now, if we look here, last date for contribution, qualified plan, elective deferral, due date of the employer's return, including extensions. So what that means, Raghu, is that what most CPAs will recommend is if you formally elect your contribution by December 31st, you have until tax day to make those contributions to your 401k plan to deposit the funds. Now, this can be a little bit different for each business depending on your business structure. If you're a sole proprietorship, 1099, single member LLC, you're probably not running payroll. You're just receiving compensation, which makes it a lot more fluid for you to receive payments and make those contributions. Raghu, if you have a corporation and you're running payroll, then you definitely want to talk to your CPA or your tax advisor. They may recommend that you run your payroll and you do your salary deferral today. If you're brand new to us and you're saying, well, but Rachel, how can I do the salary deferral today? I don't have a bank account yet. Talk to your accountant. What they might recommend is that you run payroll and set those deferral funds aside so that you have made that contribution and you're simply depositing the contribution into the 401k bank account next week or in the next couple of weeks after the IRS reopens and we get your tax ID number. Contributions are highly personal. There's a lot of different factors, your business structure, how often you're receiving compensation, whether or not you're running payroll for your business, and how you're charting all of those things, what your contribution goals are. Do you try to make as big tax deductible contributions as possible? Are you more in line with Roth? Are you doing mostly salary deferral or profit sharing? There's a lot of factors there. So Raghu, according to the IRS, you have until the due date of the employer's return, including extensions, to make your contribution for both employee and employer. How that shakes out in reality for you as far as moving money around and if and when you are running payroll is going to be a question for your accountant. So make sure you work closely with them on that. Raghu, your next question is, can my company, also match my employee's contribution? If so, is there a limit? And also, can this matching part be made by the tax deadline, or should it be made only by December 31st? This is a great question. The solo 401k does not have employer matching. Instead, it has something better. That's a profit sharing contribution. The national average for employer match is about 3 to 5%. So that means when you're putting in money for like a normal job, your employer will match those contributions, maybe up to 5%, sometimes 6%. With a solo 401k, you have something called a profit sharing contribution. The profit sharing contribution can be up to 25%. It's a far more generous amount for you to be able to contribute to a retirement plan. So Raghu, what you're looking at is two types of contributions in a solo 401k. Employee salary deferral contributions and employer profit sharing contributions. All of those contributions are based on how much you're receiving in compensation. And just as we saw in that IRS publication 560, you have until the tax deadline, including extensions, to do both employee and employer contribution deposits. Really good question, Raghu. I think we've got a couple more from you. Yes. Okay, Raghu, is there a limit for matching the employee's contribution by the employer? If so, what is the limit? The solo 401k does not have matching. It has profit sharing, and the profit sharing limit is up to 25% of compensation. Your next question, my account or asset size is more than $250,000. Should I fill up the 5,500 easy and submit it by December 31st or along with the tax returns? Really good question. Neither. The 5,500 easy is due by July 31st. That's the 7th day or the 31st day in the 7th month after the plan year, which is this January or July 31st. Your plan year goes from January to December. So the 31st day or the last day of the 7th month is July 31st. Your 5,500 easy is due by July 31st. Nothing is due by December 31st for the 5500 Easy, nor is it included with your tax returns. It's a totally separate filing. If you have $250,000 or more in value in your solo 401k at the end of today, then you will file the 5500 Easy next July. And we'll start sending out email reminders to you in about March. Okay. Last couple questions here from Raghu. Form 3115 enclosed should suffice in the selection process you were mentioning in the Q&A session. This is for mark-to-market selection process. And this should be sent to the IRS by December 31st at the post office. I'm not sure what this form is, so let me go ahead and open it up and see if I can see what it is. This is an accounting form, Raghu. So if you need to fill this out, then that's going to be for you and your accountant to do. I'm not sure of the filing deadline for Form 3115, so you need to ask your CPA, and they'll be able to help you with that. Raghu says, is there anything else I need to do by December 31st? Please let me know ASAP. By December 31st, you need to have your plan documents signed, which you do. You set up your plan with us a few months ago, and you need to do your formal election for your contribution. So let me share my screen here, and I'm going to show you the knowledge base that we have available for you. So if you go to your 401k dashboard and then you click on support, this will open our knowledge base at support.solo401k.com. I'm going to type in formal election to the search bar, and you'll see that there's a question here, or excuse me, an article on how to formally elect your contribution by the December 31st deadline. So this is the contribution instructions. Raghu, I just put that into the chat for you as well. These are going to cover the instructions on how to formally contribute your to your solo 401k and make sure that that's election is formally done by December 31st. So those are the two things you need to do by December 31st. Sign your plan signature pages and formally elect your contribution. That's all you need to do by December 31st. Last question from Raghu. The profit sharing, is that after payroll or after all the expenses that includes payroll as well, or based on the net gains before all expenses? Profit sharing contributions are based on compensation. All contributions to retirement plans are based on compensation. So, excuse me. So the profit sharing is based on how much you compensate yourself as an owner of the company for your share in the profits. Whether or not that's part of your payroll, if you have a corporation, or if you have 1099 income, that's up to you and your CPA to determine. So you'll want to talk to your accountant about this. All retirement plan contributions are based on net compensation. Thanks for your questions, Raghu. All right, our next questions come from Timur. Timur says, I am a solo proprietorship. Can I select $63,500 on the contribution form and then contribute slightly less if under the rules my maximum permissible contribution is less than $6,500? Or do I indicate a lower amount, say $55,000 on the contribution form I think I'll have for this year? And if I qualify to make the maximum contribution of $63,500, I forego contributing the extra $8,500. Timur, the contribution form is an internal form. You are your own plan administrator. So you're an adult, you're able to run your own 401k plan. The contribution form is for your internal records only. We recommend that you put a best estimate of what you are able to contribute to the plan. If the contribution numbers in reality need to be adjusted a little bit, that's probably okay. Just make sure you're double checking with your CPA or your accountant before you make your contributions. Great question. Okay, next question from Timur. My wife is my office manager. I want to pay her a lump sum of $30,000 for 2020 and have her contribute $26,000 to her account in the solo 401k. Since I do not have any other employees, I do not have any payroll service. In terms of proper mechanics, do I cut my wife a check for $30,000 in 2020 and she then deposits her $26,000 contribution into her solo 401k account? Yes, that sounds good. Double check with your CPA, but that sounds good. Next question from Timur, this I think is a follow-up. Could she, like me, wait until tax day, April 15th, 2021 to make that contribution? Or do I just directly send her $26,000 contribution in 2020 to the solo 401k plan? What do I write on the check? So contributions are based on compensation. She would need to receive compensation if this is going to be a salary deferral contribution. So she would need to be paid those funds and then they can go into the 401k bank account. Yes, she can wait until tax day. Always double check with your accountant to make sure that's in line with how you run your business and your payroll or your salary from your business. What do you write on the check? The check would be made just write in the memo line 401k contribution. It depends who the check is, right? If you're writing the check for her, it might be for payroll. If she's writing the check to her for her 401k for the deposit, it might say 401k contribution. Great questions, Timur. Thank you. All right. Next question is from Andrew. Andrew says, I just finished setting up the bank account for my solo 401k with Titan Bank. Thanks for the referral, by the way. Titan's great. And I'm excited to start investing. Woohoo. Wondering if it's possible to allocate some of the funds into an account on fundrise.com. Do you have any clients that have done this before? Yes, I have. Fundrise is great. There's a lot of crowdfunding sites, CrowdStreet, Yield Street, Fundrise, or Yield Street, not CrowdStreet, Farm Together. There's a lot of different crowdfunding real estate platforms these days, and a lot of them are incredibly promising. I found the account opening with Fundrise to be really straightforward and simple, and I like what they have going on. So you would open an account in the name of your trust, and yes, that's absolutely possible. I actually think we have an article on our blog. If I share my screen here, hopefully I can find it, but I'll do a search. Let's see. If I go to our website at solo401k.com, this little magnifying glass right here will let you search, and I'll just do a search for Fundrise. I'm pretty sure we've written a blog post about this in the past. Oh yeah, 2 blog posts that talk about Fundrise. So how to invest $1,000 in a skyscraper. This talks about REITs. Yes, e-REITs, real estate crowdfunding, and we talk about a bunch of them right here. So I'm going to link this article in the chat for you, Andrew. Bam. That will be really helpful on investing in crowdfunding. And yes, Fundrise is an option in your solo 401k with us. Okay, next question comes from Nevada. Just wanted to be clear about a few things. This is set up so I'll be able to make contributions for 2020, correct? Correct. I won't be able to get the bank account going until after New Year's and fund it. Just want to make sure that's okay. Yes, that's okay. Another question is, because this is checkbook controlled via a bank, when I buy a rental property, it'll be, because this is checkbook controlled via bank. Well, checkbook controlled, Nevada, means it's controlled by you. So some people get their checkbook from a bank account. Other people get a checkbook from a brokerage account. I have multiple checkbooks. I use Schwab for my own brokerage account, and they give me a checkbook for that brokerage account. It's called a company retirement account. I think Fidelity also gives you a checkbook, and they call theirs a non-prototype retirement account. We've got links to those guides on how to open those accounts in the knowledge base if you click on the support link in your 401k dashboard. So yeah, a bank will probably give you a checkbook as well, but you're controlling the funds. The bank does not control the funds. The bank is just where you're holding money. You control it because you have the checkbook. So Nevada's next question, when I buy a rental property, it'll be titled in the 401k trust name. I understand all that. There will be no custodian with this 401k, correct? Correct. You are your own custodian. You are your own trustee. You are the plan administrator. You are the employer. You are the employee. You are the participant. You wear many hats with a solo 401k. And so that's how you are able to decide where and how to invest your funds. There is no custodian for the 401k plan. Great questions, Nevada. All right. Next question comes from Matt. Thank you for all the support. I really appreciate it. I've signed the files and will upload in the morning. It says in the email that I don't have to send a copy to y'all. So does it mean there's no formal upload process to the IRS and just completing the signature pages is sufficient to qualify for 2020? Or does the upload serve as some kind of documented timestamp? Yeah, this is a really good question, Matt. So in most of our ways of our lives, we're not, I want to say this in a polite way, we're not treated as adults. We're not treated that we have responsibility or agency or sovereignty. But we do. In a lot of places, we really, really do. The solo 401k is one of those. You are an adult. You are able to be responsible for yourself. You are your own plan administrator. The IRS is not looking over your shoulder. Neighbors group is not looking over your shoulder to make sure that you're getting things done that you need to get done. You're just expected to do them as a responsible adult. So there's a couple of things that happen as far as documenting the plan establishment. First of all, you have the record of establishing the plan from us. So you have your order of creating the solo 401k and then the email that's timestamped of when you received your login credentials to your 401k account. Additionally, there's a serial number on the last page of your adoption agreement. That means that your 401k is registered with us as your document provider, and it's registered in 2020. When you sign as the plan administrator, the plan participant, the trustee, all those places that you sign on your 401k signature pages, you can store those in your own records, and they'll be dated for December 31st or earlier. So we treat you like an adult. We trust you to be responsible. And I mean, also, if you think about it, it's not really feasible for the IRS to pour through tens of millions or hundreds of millions of little forms for retirement plans. That's why we exist. We're a retirement plan document provider. We're approved by the IRS. It's far easier for the IRS to look over our shoulder and look at our documents and make sure we are legit and that we're providing you all of the appropriate updates and amendments and things like that than to look at our thousands or tens of thousands of clients. It's just not feasible for the IRS to be able to do that. I mean, think about you, Matt. You might have multiple retirement plans. Imagine if you had to file forms on multiple retirement plans every time you did something with the IRS. They would get even less done than they do now. So for certain areas of things, especially like retirement plans, that's why you as the plan administrator accept the responsibility of keeping good records for your plan. So by all means, upload those signature pages to your 401k dashboard. That's a really good way to know that those documents are signed and in a safe place. But that's it. You're responsible for yourself, and you electing to open the plan in 2020, signing those forms by December 31st is what makes it all legit. So yeah, congratulations, Matt. All right. Next question we have is from John. John says, I have a few questions relating to dates of the plan, LLC actions, and appointments. These documents all state January 1st, 2020. My company wasn't in existence at that time. It was formed on December 18th, 2020. So the member action cannot be done before that date. Likewise, I believe the effective date of appointment of trustee must be on or after the member action. Do I need a short plan year for this year running December 18th to December 31st and then have the normal year January 1st to December 31st in 2021? No, not necessarily. The plan year may be effective from January 1st to December 31st. What you're looking at is the adoption date. That's the date you're signing on your plan signature pages, and on your appointment and acceptance of trustee, you'll put the adoption date as whatever date you're signing the pages. So it's the adoption date is when your business is adopting the plan. And it's okay to have your business adopt a plan for a plan year of January 1st to December 31st. Good question, John. All right. Last pre-submitted question here. Like I said, we're going to keep today snappy because we have a lot of applications coming in, and I want to make sure I go back and help the team get those all processed. For those of you who are new to us, I know some of you are waiting very patiently, getting your documents done. We are working on those as quickly as possible. So I'll do one last call for questions here. You can click on the link. I think it's probably right there that says ask a question, or you can type into the chat on this side of the page if you have any other questions. Our last question here is from Raghu. Raghu says, formal selection after signing. I think the formal election after signing. Should we send it to the IRS or just sign and keep it in our records? Raghu, you just keep that in your own records. The IRS does not expect your contribution form. They don't want your contribution form, and they have no way to process your contribution form. The way the IRS processes your contributions is for your tax return. When you're doing your tax return for your business and for you personally, that's where the IRS sees your contributions, and that's where they get to make their taxes off of your earnings. So they do not expect and they do not want a copy of your contribution form. You just need to complete that and store it in your own records. Good question. Okay, last question here from Raghu. Raghu says, can profit sharing contributions also be contributed as Roth 401k? No, profit sharing contributions are pre-tax only. You cannot do a profit sharing contribution as Roth. Now, Raghu, if you want to get as much money as possible into your Roth 401k, what you do is you can make your contributions and then you can convert those contributions in plan from pre-tax to Roth if you're making employer profit sharing contributions. That's taxable. The IRS expects taxes when you move money from pre-tax to Roth, but that is an option. If you are looking to put your employer profit sharing contributions, but you want to find a way to get them into Roth, you can make those employer profit sharing contributions and then convert them in plan to Roth. But otherwise, if you're just making standard employer profit sharing contributions, those are pre-tax. All right. Well, that is all of the questions that we have today. Yes, Raghu, the back door is something different. The back door is something, you're welcome to look that up on our knowledge base or on our website. We have lots of resources on a backdoor IRA. That's a different structure than what I'm talking about here. This would just be considered a Roth conversion. This is just pre-tax to Roth is a Roth conversion. The backdoor IRA is something a little different. We'll probably be doing a training on that in Q1 of next year. We have a lot of exciting trainings lined up for you. So with that, I will bid you a very happy new year, a healthy, safe, and prosperous 21. I'm personally really excited to see what 21 has in store for us. This year was certainly very challenging, but I think that we have grown a lot as a global community. We've learned a lot this year about what works, what doesn't work, and how to live even more awesome lives. So if 2020 has been particularly challenging for you, then I'm excited for what 2021 holds. If 2020 has been awesome for you, then I'm also excited to see what you can do in 2021. Our team is super excited to be on this journey with you. We look forward to continuing to support you. Have a very happy, healthy, and prosperous